gold getting a bid while silver hit an all-time high today as stocks fell, and Deutsche Bank's betting that gold is about to bounce higher as global central banks continue their bullion binge. Our next guest, though, says the metals are about to lose their shine. Let's go off the charts with Chris Verrone of Strategas. Chris, take it away.
Hey, Melissa. Well, listen, when you look at the longer-term gold chart, it's hard not to like it. And just like many others have pointed out, you've come out of this very big base. You were in a 7-year bear market. We know that's turned. But our concern tactically is how stretched gold has become. About 16% above its 200-day moving average, the most stretch we've seen in a number of years. So I think if you're long gold here, you have to think about hedging the position. What I want to show you here is the short-term chart. This is just this year, and we're showing gold with its 20-day moving average, which has been support here, support earlier in the year, and it's where we broke out from in the middle part of the year. I think if gold's correction or if gold's going to pull back here, that 20-day moving average is going to be your line in the sand. You start to break that, I think it risks something deeper, maybe back into that 1440, 1430 range. So I think ultimately the long-term chart's okay. It's the short-term picture, how stretched it is, that has us worried. And also sentiment's gotten very aggressive. These are rolling 3-month flows into the GLD. They have absolutely surged over the last number of weeks. So this is a crowded trade. It's stretched. I think sell some calls, buy some puts, protect the position here. If we look at silver, it's a similar situation except one change. Silver, for the first time this entire cycle, it's underperformed gold. That is starting to turn here. So I think in relative terms, owning silver over gold may make some sense here. What I want to be mindful of when you think about gold, it's the same trade this year as utilities, plus 20%, bonds, plus 20%, gold, plus 20%. So I think if we're going to start to see some cracks in gold, I would suspect we see cracks in those others as well. Longer term, we know the chart's fantastic. It's about what do we do in the short term. We think it's too stretched. Hedge.
Chris, come on over. Jonah will bring the chair in.
Yeoman's work by Jonah.
Bringing the chair in?
Yes.
Respect, Chris.
Yeah, you look great.
Nice shades.
You really do.
If even in the short term we see a pullback in these so-called safety trades, does that necessarily mean that we see a bounce back short term in some of the other sectors that have lagged?
I'm not sure I want to go that far yet. I think when you look at what has been so telling about the last number of weeks, despite gold overbought, despite bonds overbought, despite utility overbought, we haven't seen those cracks yet. That's why I think you have to use some of those trailing day stops, right? That 20-day moving average on gold has been support all year long. I think if you're going to get a deeper pullback in gold, it probably starts with a violation of some of those levels.
If you see gold-silver ratio starting to, again, you started to talk about silver is outperforming as it should. We got to basically all-time lows on silver gold. Is that indicative of a change in risk profile?
You know, it might be. Silver outperforming gold, it's a little bit more of an industrial.
Yep.
I'm curious if that may at least be a similar message to what we're seeing in surprises. Economic surprises have actually started to turn up here. I'd be curious if copper can start to get a little bit of a bid here as well. There's record shorts in copper right now. It's a bad chart, but there's record shorts. And I just think we need to be careful in this environment where positioning or sentiment gets too extreme. Copper's one of those spots here.
Could there be something with gold? We mentioned the Deutsche Bank note earlier, but their case is that all this political uncertainty, but also central banks, there's fewer alternatives to the dollar being a safe haven, so they are propelled to go into gold.
No question.
Do you think that things are, I hate to say different this time around, but could they be?
Every once in a while, things are different this time. And if you look over the last 18 months or so, central banks have been absolutely buying physical gold. And it's starting to manifest itself in the price. Listen, I understand what Chris is saying, being disciplined, taking money off the table, and something that's run significant amount makes sense. But I still think this has legs. And Dan spoke to this. Now you have 30% of global sovereign bonds with negative yields. And if you back out the U.S., that number is ridiculously high, which is why I think gold still has legs here.
I think the big question with gold, and this is a little reminiscent of late 90s, when gold first started to work, people woke up to it, but you really didn't get paid, like really paid, until 03, 04, 05, 06. So I would ask the test, what is gold telling us now about the future? Is it inflationary? Is it deflationary?
Deflation.
Right? So
not even close. And 2003 and 4 and 5, you're talking about was the beginning of a massive commodity super cycle, which was about reflation of assets.
Is that in our future? And I don't think any of us know the answer to that question just yet. And, when we talk about gold, negative carry, right? This is the first time gold has a positive carry in maybe its entire existence. So there's a reason, I think, Guy, you touch on it. It's a very meaningful reason why gold has worked here.
With this backdrop, what does the S&P chart look like?
We're in no man's land, right? I think Tony said it himself the other night. We're in this 28.22, 29.45 range. I think the big level is 27.30 on the S&P chart. If you violate that, it will be the first lower low, really, of this cycle. We don't want to see that. You don't make lower lows in bull markets. 27.30, I think, is the key level for longs here.
Chris, thank you.
Thank
Good
you.
to see you. Nice glasses, right?
It's great specs.
Looks great. Handsome.
I wonder if they're real, or if they're just glass lenses.
Glasses.
Oh, for the look, for the fact
Really
of it?
smart.
You never know.
And he sounds smart. He always does.